Hello and welcome to another update video about AGIX. So the AGIX chart, has produced another low that was expected. In my last video, we were just hovering around the, or just above, I think, the 22.7 cent level. We've been talking about it for weeks now that due to the three-wave rally here into resistance between 31.7 and I think it was sort of 34.5 cents, which is standard resistance for a wave 4. Another low was expected. Now that happened. It didn't suffer as much as some other coins, but also here, obviously, this is now challenging the bullish support level. So what you need to know, a sustained break below the 78.6 Fib level will make new bear market lows very, very likely. Compared to some other coins, it's actually holding quite well, I have to say that. Many altcoins already broke the 78.6 Fib level. Wouldn't have thought that AGIX is one of them that's actually holding. But hey, this is certainly not an easy one, and it's not clear if it will actually hold the bullish scenario, the bullish support. So below 17.3 cents, a sustained break below that, we have to look for new bear market lows, okay? And it would probably do that in an ending diagonal, in which this here would be a wave 1, this would be a wave 2, this would be a wave 3, this would be a wave 4, and the wave 5 could come down, or in some kind of a I mean, again, this is if this is an ending diagonal, it can morph and change. So it could absolutely be that, this is the wave 1, right? Then we had here wave 2. Okay, wave 3 maybe, wave 4, but this could be the A wave of the wave 5, the B wave of the wave 5, the C wave of the wave 5. And it's enough if it just makes it just goes a little bit below the last lows in January. But again, bear in mind, we talk here about 3 to 4 cents. So the thing is, it looks better as a bullish scenario, okay? We have a possible impulse to the upside with a very extended fifth wave. We have a very, very correctively looking decline with a lot of overlaps. So from everything I can see at the moment, ideally this is going to hold. But of course, if it breaks, the 78.6 Fib level, it does matter. If it breaks, typically they fail. But there is also the wave 4 support down here around 16 cents. But I wouldn't consider that a sustained break. If it makes one more tiny low, and it looks like it needs another tiny low, if it makes another low, touches that level and goes up, happy with that, okay? If it really breaks below the 78.6 Fib level, and you can see how relevant it was, because after it broke below the support, the 22.9 cent level, which I said would be next support, but it will probably break below it, then it just touched it and bounced off, okay? So it just touched it. You can see how accurate that one worked out. Now, I will add the 88.7 Fib level on the chart. It's just sort of as an info level, because to be honest, there is not much more left after the there's not much left after the 88.7. Sorry, after the 78.6. Let's just do that here. 0.887. So that would be at 10.9 cents. It would also tell you that if we break below that cluster of support here, structural support around the wave 4 and the 78.6 Fib, it goes quite quickly probably to the 10.9 cent level, okay, because there isn't much left in terms of historical support. So either it holds that, or it will come down quite dramatically, in my opinion. And it looks like, looking at the wave structure, didn't want to do that. Looking at the wave structure, and by the way, let me hide the other support levels. We don't need them. They're just sort of in the way now. 61.850, don't need them. They're just confusing now. What did I want to say? Oh yeah, first of all, let's look at the wave count anyway. I'm counting that as an A wave, a B wave, and a C wave. And the C wave here is a 1, 2, 3, 4, 5. Works quite nice, actually. But of course, looking at the microstructure here, at the moment, what is happening here looks a bit like a bear flag. So it would suggest to me that one more low is certainly not unlikely, okay? Certainly not unlikely. And what could be is that this wave 5 itself unfolds as an ending diagonal. So might have got the wave 1 done, the wave 2, the wave 3, this is the wave 4, and the wave 5 of 5 would be the next low. So yeah, keep an open mind here at the moment. I did talk about it in some other videos as well. As a first signal that the trend is changing, of course, we need a 5-wave move to the upside. And ideally, I want to have that 5-wave move to the upside above the level where the fear really started. And that was above, here in this case, that candle, that 4-hour candle, when it started, when the volume spiked. That was, the beginning of that was around 25 cents, 24.6. So a break above that in an impulsive fashion would be a good signal that an overall more substantial low is in. If it is then already the third wave rally to the upside, which would take us to new highs, that remains to be seen. Okay, that's my my idea about AGIX. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.